Good morning, good morning. Welcome, everyone. Good morning. Welcome to the tradingsyndicate.org. I'm JJ. Hey, John. Hey, Worm. Trademaker, how are you? Hey, Rufus, how are you doing? Welcome to everybody in the room and on YouTube. Good to have you with us. And today is Happy Fed Day, happy month end. And pleased to report that the markets are functioning in a normal manner. So our overnight inventory is long, pretty much 100% long. Hey, Juan, how are you? What's up, Mr. M? So, yesterday we had some liquidating inventory. Right? Hey, Moran, it was taken into wholesale hands and now is being sold into the retail flow for profit. Right? Market's functioning normally. If this had been a severe liquidation, we would already be underneath yesterday's low. So yesterday was a great opportunity to for the shorts who are short this move to come and do some covering, you know, before month end, which is today, right? Yeah, I don't know. You guys use this melting thing. I always think of ice cream when it melts, right? But this is just normal market behavior, right? There's nothing really, there's no tinfoil hat stuff going on. You just get people get too long, they liquidate, which is good for the people who got short underneath, added to it, and then they can kind of square off some of their positions. People who don't trade size really don't know what the hell I'm talking about, so that's why I talk about these things. I mean, sorry, people who don't trade size, right? You know, retail traders really don't understand how inventory works. Most people haven't even heard of it. So that's why we talk about it, because inventory and order flow are what moves the market. Nothing else, right? News and stuff are catalysts, but when inventory gets too long and it liquidates, you look for signs of where the bid is, and we found the bid. Now, I'm a big believer in practical trading. There's far too much gibberish out there. People talking about all sorts of stuff and they can't back it up. They can't explain anything. But the one nice thing about market profile is if you use the practical, simple methods, and they're not taught anywhere. So I thought, well, let's try and teach them, right? Where did yesterday's low go? Went right to the poor low of last week. There was a poor low here and there was a poor low here. You'll notice that the cost basis is right at that poor low, and we hit that poor low to the tick, right? In fact, that's a trade I took. I took 98 long against the poor low and sold into the fours. And that's the only time I've traded the last half hour of the day, and God, it's probably been at least a year. So, and I was waiting for that trade all day. As soon as I saw it hit that thing to the tick and stop, now that is something, because most people don't even know what a poor low is, right? A poor low means that there's competitive buying at these levels, right? So when the market comes back down here, is that bid still there? Are those buyers still sitting there with their nose pushed up against the door, waiting to get in, and indeed they were. So when you understand how markets actually function, you can trade them in an intelligent manner and manage your risk, right? Any idiot can push buttons on a keyboard or on a mouse. But if you actually understand the reason for the trade, then you'll understand when the trade doesn't work. My risk, right? My risk was very, very light on that trade, very small, because it was right underneath that low. So I know if that broke, right? If I know if that level breaks, all of this candy is going to start falling out. There's no reason for me to be long, right? So this is one of the only places where we talk about what is the valid business reason for taking a trade. Now, for all you traders who have this fantasy world FOMO, tilt, MOMO, shlomo, all that stuff, right? You can use this in an intelligent manner, right? Because if you know the business reason why you're doing business, you're not going to just casually do business without thinking, right? You're not going to take these FOMO trades, right? Because you'll understand that there's no business reason for the trade. Why the hell am I putting money up just to lose it for no reason? You might as well, take the money and have a party with it. At least you'll have a good time, right? So if the bid is gone, why be long, right? You know, why that low? What do you mean, Worm? Why is that low important? Because it's a poor low. In market profile terms, it's a poor low. What does that mean? I'll show you. Good question. On the way up, the market left two poor lows. I don't know if you were in the room when this happened. I kept yapping about it over and over again. Do you see how there's only one letter here by itself? Worm? Okay, that's what market profile people call a poor low. A normal low is like this, where they have a bunch of letters, right? That's called excess. This tells you that there's competitive buying there. Get what I'm saying? So when the market comes back to that level, you look to see if that competitive buying is still there. If it is, then you can go long off it and put your stop right underneath it. Does that make sense now? See how simple it is? If you know they're going to be buyers at 63.96 and a quarter, then you can go long off that level, right? Now, I didn't buy 96 because I'm not that quick. I bought 98, put my stop at 96, and I sold into the fours. If you scroll backward, or if you look in the JJ levels area, I detail the trade. I show you how I did it on the candles. I show you where I put the stop, where I took the trade, where I sold, and why I sold where I sold. Okay? Hey, John. Right. So I also said when poor lows stack up, right, it's meaningful. So they had two poor lows. We had a poor low here and a poor low here. So there's a lack of supply under these levels. That's why you see yesterday M period went down. It broke that poor low. Actually, E period did. Right? But every time we went underneath this low, right, there was responsive buying. Right? Let me pull your attention to this fact. Right? There's that low. Look at the value area of yesterday, or the cost basis. So once again, there is responsive buying under 64.02. So there are bids here, Why are there bids here? Because we have short positions going into month end, which is today, right? So here's the thing. If you're going to trade, right, you should know a little bit about the business. So you don't have to know how to run a market making business, but you should know that there's a wholesale element to the business. You should understand how the market works. Otherwise, why are you doing business in something that you completely don't understand and you're relying on patterns, right? If you don't understand the pattern, why the pattern is created, what is the point, right? You might as well just be throwing darts at a board, right? So when you see those poor lows, like I took a quick scalp, but you can, if you're a larger trader, right? Now this trade is basically is a look below and fail, right? It's called many things. It's called the catcher's mitt because what's going on is liquidating inventory, right? The liquidating inventory from up here, right, is being caught into wholesale hands and then resold into the retail flow for profit, right? So large traders who were building a long position last night here, they're doing pretty nice getting rid of it here, right? There's a lot of traders who do that. They'll pick up 50, 100, 200 contracts, right, when they see how the market closes, and then they just sell it in Globex, right? Thank you very much. Thanks for coming out. And that's how you use the information that you get from the market, right? The market profiles, what are they, guys, they call it what? Market generated information, right? It's basically the lowdown. What's going on? Give me the scoop. Give me the information, right? Use that information to make money. This way you have an advantage, an edge, because you actually know what's going on in the business, right? Keep it simple. Your analysis doesn't have to be 15 pages long. You don't have to write a doctoral dissertation when you do a trade plan. Hey Dan, how you doing? Right. So we have a poor high in the overnight. So Worm, a poor high is the opposite of a poor low. A poor high means there's competitive selling. So what we're waiting for now, and a lot of people will automatically short a poor high. Right? Now, overnight inventory is 100% long. The natural course of business is to see some liquidation to that inventory as London opens. So anyone who is short, where would your stop be? And why? No one's had their coffee? Be just right above the overnight high, right? Exactly, right? Your stop's going to be there. Because if we take out that overhead stop, it'll go and trigger that one probably. You don't want to, if you're short 15, you don't want to be covering at 20. You might as well just cover at 17 and get it over with, right? Hey, Mr. Simpson, Chris the options guru. Ah. Do you know what his screen name was in Discord? I think so. So right now we have a seller at 15 and a quarter. Oh, Chris. Oh, yeah, yeah, Chrissy. Yeah. He is, he drops in every once in a while. That's right, he's got a bad ticker. But he's doing okay from what I heard. I heard he had a couple of heart operations and he's doing better. He took some time off. Yeah, it's been a while. I should check in on him. Chris Hanks, good guy. Yeah, that's right. He and I used to do a lot of business in Salt Lake City in the old days with the deal guys. Well, this is kind of boring. Look at these candles. It's a Fed day. It's going to be slow, right? So if you were long, say you were a market maker or a wholesaler and you took in a bunch of contracts yesterday on that sell-off, you'd just slowly be trying to get rid of them here at night, right? Or early morning. Try and get rid of your inventory and see if before the Fed announcement, right? Just in case. So what are they supposed to do today, Raj? They're just going to hold rates steady? No big news? Let's see. So there's a fairly constant seller here at 15 and a quarter, right? So if that seller keeps lowering the offer like they are, see the red line? You want that offer to get lower and lower and lower. That'll create your trend down. And if you're short, you're looking for 13 and 3/4 to break. So if you are short up here, using this as your stop, your first sign of success is for a 13 and 3/4 print. But if we can't take out 13 and 3/4, it's going to be a pain in the butt. And that's pretty much all there is. I can't recommend a long right now because inventory is pretty much 100% long, right? So if you look at why we say overnight inventory is long, it's because other than this one, other than these 15 contracts here, right? Other than these 15 contracts, every single trade is above yesterday's close, right? That's why I'm short. Just two at 14, just here, 14.63 on two, right? And I'm gonna put a bid in at 13 and a half. And I'm just doing this with the micro to see whether or not my brain is working because I've identified a seller, right? So if we can break this level and get down here, that tells me that the selling's pretty decent. Now, if I can't get a 13 and a half fill, right? Then I know I have to start taking back the position. Does that make sense? Do you guys, does that, it's about as simple as I can explain it, right? So if I have a bid at 13 and a half and nobody wants to sell me anything, I'm going to have to move that up to 3/4 and see if I can get a print. Okay, it's real simple. Hey Dave, how you doing? I messaged you yesterday. When we have a chance, we should chat. And thanks for sending me that info. It's really cool stuff. No worries, no rush. Okay, I bought one at 13 3/4. Now I'm going to go half on the other one and see if I can get a fill. And if I had more contracts, I'd just stagger the buy orders, right? I'm just short two. But if I had more, I'd put buy orders down here. It's trading half. Do I get a fill? Come on. Nope, no fill at half. It traded there, but I didn't get any, right? So now that gives me information, right? If you have a buy order in at 13 and a half and you're short and you can't buy any at 13 and a half, what does that mean? Okay, I got filled at half. I'm flat. I just had to wait a little longer. Yeah, there's no seller. Exactly. Right. How do I think the Nifty is structured? I have no idea how it's structured. Um, about a year or two ago, I used to do levels for the Nifty, right? I had a bunch of guys from India in the room, but they signed up for the room like and then they just disappeared. I remember what it was. We had a 2 week free trial and they signed up for the room and I was putting out levels and stuff like that. And then none of them stuck around in the room, so I just and nobody stopped and then they stopped asking for Nifty. So, right. I was short micros, John. Yeah. John, remember that document I gave you when you first joined the room and then sent it to you again, the 5 steps? So every day I draw the balance zones and then I test them using the micros. So I was short using the micros to test and see whether my brain was working. My first trades of the day are always on micro, so if I'm wrong, I don't lose a lot of money. So you manage your business expenses. Yeah. Yeah, I don't have nifty quotes, but you can the balance levels that I used to do on Nifty when I had nifty quotes work really well, right? I remember the Nifty being a very gappy market. It would gap up and gap down. Is that still happening? Do you guys actually trade it? Is it still gappy? Does it still gap up and down? Yeah, there's a lot about Indian markets that I don't know about. Like, is short selling a big thing? Is, you know, the rules, all of that sort of stuff. It is Mr. Simpson. We're still at night. Yeah, we still have that sale going. Give it a shot for a month. Just come see what you can learn. Everything I do is focused on simplicity. It's got to be simple. If it's not simple and it cannot be explained, it's not worth doing. So that 12 and 3/4 seems to be working, right? There seems to be a responsive bid there. VWAP is just underneath it, so they're front running VWAP. Now let's see what happens when London opens in 2 minutes. So as we came down to 12 and 3/4, the sellers saw that there were buyers lined up here, and they started to lift the offer. See, that's the red line here. See how it's lifting, right? It's called the ask or the offer. And when the ask is moving higher, it tells you that the sellers have seen buying. Right? And they're raising price. What's going on in Hawaii, John? You got the tsunami warning? Hope you guys are okay. Okay, London's opening. Let's see what happens here. Two ticks. That's a slow open. Oh, three ticks. Can we get four ticks? This is painful. All right, let's see. Four ticks. Let's get a liquidating tick. One more. Five. Ooh, there we go. Came right to VWAP and bounced. Let's see if that holds. Remember, inventory is long, so we're looking for this, right? That's the normal thing. And when the market goes down, we're going to look to see where it stops going down because it'll tell us where the shorts are really trapped tonight. There we go. Oof. It's one of the slowest liquidations I've seen. Hey, yes, what's going on? You guys have any questions while we're waiting for this thing to drip down? Am I filtering my trades? Definitely. If not for you guys, I wouldn't even be in front of the screen. The best month end I've ever had in my life was at the end of May when I went to Spain. And I was gone for the entire month end. Didn't have a screen, didn't have quotes. It was beautiful. See, month end is when professional traders sit in the vault like Scrooge McDuck and they roll around in all the money that they made, right? Everybody else is running around like a dog chasing its tail trying to make some scratch. The people who've already made money at the end of the month, their goal is to keep the money. So, especially on a Fed day. So today's like a double whammy, right? It's a Fed day and it's month end, right? So I will be scalping. I'll scalp the micro just so I can be involved, so I can tell you guys what's going on, right? But if not for you guys, I would not even be, I wouldn't even be in front of the screen. You trade NQ any levels on that to go long? Well, if you came into the room, Mr. Simpson, we have lots of stuff for NQ. I don't trade it, but you know, I could. I've got a. Where the heck is it here? I've got an old TPO chart here that I need to redo some levels for the NQ because nobody really asks me for NQ levels. But if you came into the room, I'd happily do them. I don't mind doing them. What made me take the short? Inventory was long, John. Just like yesterday, remember? When inventory is long, you test the short. And also there's a poor high. So there's competitive selling. So if you know there's competitive selling, why would you go long? You wouldn't, right? So number one, that's why we do this every morning, John. We go, overnight inventory is long. What is the natural business reaction to long inventory? Number two, you've got competitive selling at the top. So you want to think through the business reason for your trade. Yeah. Well, now that you're retired, you can spend more time, you know? Yeah. Yeah, I covered too soon, but that's okay because it was a test trade. So when you see ES at VWAP like this, how can you tell when it's going to break through or hold? I can't until it tells me, Simpson. Kunj, I can't look at Nifty. I don't have quotes, my friend. I don't have Nifty quotes. Sorry. I don't have the data. So, Mr. Simpson, do you see how it's kind of going back and forth through VWAP right now? So what I'm watching for is I'm watching the offer. See, the offer kept pushing lower. When we got up to VWAP, if you rewind this chart, right, and this is a really good thing for retail traders to do is use chart replay. When it went up here, you saw the offer push down. So you could see that there was a seller at VWAP, right? At first, when you look at this stuff, it's not obvious, but you've got to put in the time. Watch the offer, right? Don't worry about the buyers. We'll take care of the buyers. Watch the offer, right? The offer sets the price according to the buyers that are coming in the market, right? That's why they call it making a market. That's why they call it market making, because the market is made according to the flow of customers, order flow, that's coming into the market, right? That's good. That's a nice inventory correction. If you're still short, if we accept under 9.5, we'll look for 6.25. Right? There's some responsive buying here. Let's see how long it lasts. Right? You can never predict if it's going to break through VWAP or not, especially on a slow night. The quote unquote normal course of business is to break VWAP, go underneath, find the buyer, wholesale comes in, and then we go back up, right? But when you break VWAP, what you're looking for is you're looking for the bid. Now you may ask what the bid is. The bid is where short sellers are trapped and have their buy orders into cover. Look, you have three candles with the exact same top. You've got sellers initiating here. So if you're short and the market can't take out 10 3/4, you can stay short because the market can't offer above that level, right? This is just all really simple stuff, but you gotta pay attention and you gotta watch this over and over again. You must pay attention, right? You will miss all of these things. You see there were sellers here too, right? You have to focus and pay attention, right? This way you will actually understand what's going on, right? Seller, 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 you can stay short. Seller, 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 you can stay short. The next candle opens. If that top cannot get up to there, you can stay short. The red line is the offer. The red line tells you, the red line controls the market according to the amount of customers that come in. So if sellers see buyers, they will move price up. Why? Well, that's how business works, right? Now watch when it gets up to 10 3/4. Pay attention. Now, if the sellers see buyers lining up, they will lift the offer and you'll get a 64.11 trade or print. Those sellers are still there. This is the cheapest, easiest way to look at a market. All you need is a 1-minute candle chart and the ability to pay attention, right? That's all you need. You need a 1-minute candle chart, the ability to draw a straight line, and the ability to hold your attention on something for more than 30 seconds, right? Now, if you're in a trade, you're not going to be paying attention to this. So take some time. Don't just trade like a madman. Sit and watch how price reacts when it gets to a level. Watch the offer. If the offer cannot get above 64.10 3/4 and get an 11 print, that means that sellers are competing at that level, lowering price to capture the buying. Right? The object of a market is to sell your inventory. See, retail traders don't know this because they've never held inventory. But when you're long, you're holding inventory. Right? So see how if you were short, you could have stayed short. Right? Yeah, next level is 7 3/4. Exactly. Right? Just watch. Focus. An exercise that I give people is, can you focus on this for 2 minutes? Start by trying to focus on the 1-minute candle chart for 30 seconds. Without looking at your phone, without looking at the VIX, without, getting tempted to be in a trade. Can you expand that to a minute? Can you expand that to 5 minutes? How long can you hold your focus? Because if you can't hold your focus, you're going to be piss poor at this job. You have to focus. See how the offer is moving lower? Price is being put on sale. The product is being put on sale to capture what little buying is. The traders who own the product, their cost basis is 64.06. That's what they paid for the product yesterday. They sold it at profit and now they've put it on sale. So the market should come back to the 6s or the 7s in that area, right? See, this is exactly what I'm talking about, Worm. I'm not looking at the Nifty. I'm watching the offer. I'll look at that later. Thank you. Right? Worm, are you watching the offer? Right? Pay attention, folks. Right? You want to be successful and make money doing this. Pay attention. Right? The market is now coming back to where the goods were acquired yesterday. Right? Put down the chocolate bar. Pay attention. When the offer starts lifting, like it is now, watch it at 9.5. Right? They found some buyers. Why? Because we came right to cost basis. The sellers stopped selling. Now the shorts are going to come in and cover, so the offer lifts. Do you see how it's lifting? The red line is moving higher. That's called lifting. right? Then it comes back down. So now we know that there's a seller at 9 3/4 and they're going to compete at half, right? This is the most basic knowledge in trading. If you're in a trading room and they're not teaching you this, they have no clue what they're doing. And they've never been the offer. The reason I teach you about the offer because I spent 25 years being the offer, right? If you look at my location on Twitter, it's on the offer. I sell, you buy. I keep selling till I find new buyers, right? Distribution, right? That's what the purpose of a market is. A market is there to distribute inventory. That's why they call it a market. Look, there's a seller at 9.5. They're competing at 9.5. Pay attention. Watch the offer. See how it lifts, how it lifted and came back down, lifted and came back down? That's because as soon as it lifted, somebody undercut the price. This is all done electronically now, but the business never changes, right? It just becomes more efficient. So you're not screaming into phones. You have electronic trading, which is infinitely more efficient. So now inventory is correcting lower. For it to fully correct lower, we're going to have to go and tag the close. So if we had been short size up here, we'd be sitting there bid to cover here. That's why it's kind of stalling out on its lower progress right now. If those bids get filled, right, support is created by unfilled buy orders. So if those buy orders get filled, the market will trade lower. On one 30-minute candle, no. Well, you could, but I don't know what you're trying to do. I don't know. I've never even thought about that, John. Watch the offer. Watch the offer. Just use the 1-minute candles. This is why I teach you guys to do it. Watch. You see how the offer is moving lower, right? And then it'll move lower in the next 6 seconds. And we're coming into the point of control. Right? We're taking all the stops, the next stop. There you go. Right? Remember what we said the target is? Down to 6. 6, 6/4. Right? Right? Look how it's starting to lift. Right? There's a few buyers there. It's trying to entice those buyers to spend more. Right? This is how business works. No chart, I don't because it's not important. The point of control is just where 70% of the cost basis is priced, right? That's why I'm trying to get you guys to focus on what I'm teaching you, right? The cost basis is here, okay? That's all you need to know, right? That's all you need to know is the cost basis is here. Now you watch the candles and watch the offer. Just watch the offer, Richard. In a developing market, it gets hard to understand whether the market is in distribution or accumulation. Well, it's pretty simple, right? A market sells off. So think about it. Have you ever bought a car, Kunj? Have you ever been to a car lot? Have you ever bought anything in a store? Okay. So when you buy something in a store, do the people who sell it to you, are they selling it to you at the price they bought it at or at a profit? Okay. So accumulation is when they buy their inventory. Distribution is when they sell it to you. Get it? Right? You're in the room. There's videos in the room on all of this, right? I have videos outlining this specifically in the room. I reposted it again last week or 2 weeks ago because nobody watches them. What a trip, right? Just go into the JJ videos section, brother. There's everything is there, okay? Let me I'll actually just post it in hang on a second. There's a video. I'm going to post it in the ES room right now, okay? There, it's posted. It's called inventory and cost basis. Right? Ooh. So now think of this like a used car lot, right? We took the cars, we sold them for a profit, now we put them on sale back to where we bought it. If business is bad, then we will have to discount the price lower than our cost basis, right? That happens in business, right? Say you buy a bunch of apples and you spend 20 cents an apple and you're selling them for $1, right? Before the apples go bad, you might have to blow them out at 10 cents, right? It's commerce, folks. This is a sales chart. This is just a sales chart. It tells you how sales and distribution of inventory are going, right? A 1 minute chart tells you how sales are going on a minute to minute. A daily tells you how sales are going on a daily, right? It's just a sales chart. It's just commerce, my friends. Just commerce. What's the next move? The next move now is if this is just a liquidation, inventory correction, then the market should go sideways in this area for a while and then back up. But the order flow has to permit that. If not, we'll come down and we will test the overnight low and then 6402 and then um, yesterday's low, which was the poor low to the tick. So now you go get a coffee, wait for your next trade. Now remember that today's a Fed day, so most of the brokerage firms will have increased margin, right? They're not going to let you play. They're going to raise their margin rates until after the Fed announcement. So just remember that. Why does that affect you? Because you'll have less traders in the market. So there might be less follow through. Just something to be aware of. Okay? You're doing okay on your scalp A's, yes? You taking courses at the CIB? What are you taking? Not a bad buying response. Let's see if that 11 excuse me. Let's see if that 10 and 3/4 seller's still there. Work on your tilt days. Introduction to futures. Oh, cool. Hey, look, we might have cleaned out. Let's see if we can get an 11 print. Woo, an 11 print. That's not a bad buying response. I was not expecting that. Yes. Inventory long, look for shorts. Inventory short, looks for longs. Right? Because Mr. M, what are trades based on? What is the mechanical business reason for a trade? Here, if you went long at 7 or 8 or 9, right, it's because there's a lack of supply. So you pick up some supply to sell the supply at a higher price for profit, right? If there's too much supply, you sell next to the seller and cover when the seller stops selling. So a poor high tells you that there is competitive selling. Go short. Poor low when there's competitive buying. Take a long. See how simple it is? Now, if it doesn't work, right? So if inventory is long and it does not correct, if inventory is long and you take a test short and it doesn't work, then the light bulb should go off because the market's trying to hit you in the face with a fish and going, hey, pendejo, right? It's going, hey, there's a strong bid. Don't short this, right? It's got to be simple, right? So if you go long and the market starts to sell off, that means the competitive selling is still there. So get the hell out of the way. This way you don't step in front of a train. Hey, right back to VWAP. That was a neat trick. All right, folks. We'll see you at 9 o'clock. Trade smart out there. Come visit us at thetradingsyndicate.org. We will teach you how to trade with common sense. Keep it simple. Manage your risk. Right? And we will see you later. Have a great morning. Thank you for being with us. Bye for now.